You're watching our budget conversations as we speak about the financial year 2020-21 financial year budget. And this evening we talk about financial inclusion. I'm joined by Joseph Lutwama, who's the Director of Programs at the Financial Sector Deepening Uganda, FSDU. Joseph, I want to start by asking whether the budget for financial year 2020-2021 addresses the key fundamentals for financial inclusion.
Yes, broadly at the macro level, it does, because we see that government has taken steps to ensure that they capitalize the central bank, which is very critical to ensure that there's stability within the financial system. Also, we know that government has taken steps to ensure that they capitalize the Uganda Development Bank, which they believe will be critical in driving growth and recovery, especially in the business sector. I know also the president has specific program targeting cooperatives, savings groups. I think it's called a Nyonga or something like that. So to that end, government can be commended for the steps to ensure that financial inclusion is key. From my end, we look at financial inclusion in very simple terms. Financial inclusion is being able to get money into everyone's pockets. Money is the fuel that drives the economy. Without money, I cannot buy the goods from the market. And if I don't buy goods from the market vendor, the shopkeeper won't have money to grow their business. If they won't have money to grow their business, that means that they won't be able to employ people. So it is a cycle that at whatever point you break that cycle, it could actually bring down the entire economy to a standstill. So that's why it's very, very, very important to make sure that all the different financial players across the spectrum, both formal and informal, are supported to keep the economy liquid.
I want us to dig into your contribution around UDB and the capitalization of UDB this year by over 100 billion. How is that fundamental in addressing, the issues around of financial inclusion, but also providing money into the putting money into the economy?
Yes, capitalization of UDB is the easiest part. Allocation of those funds is where the biggest challenge will be. And the challenge for UDB and all the different actors who will be responsible for that funding is how to efficiently allocate that money or funding to sectors that have a huge multiplier effect for recovery. We all know that agriculture is one of those, and agriculture is one of the least funded sectors or least supported sectors by the financial system. Even where you have massive agricultural loans, they usually go to the big players. One way in which UDB can be able to effectively use that money is to be able to channel that money to strengthen critical agricultural value chains. One that comes to mind is maize. Why do I say maize? Ugali is a staple food in almost all the nations in sub-Saharan Africa. Uganda is in a very pole position to take advantage of the unique climate it has to be able to not only support recovery within Uganda, but also support recovery within the region, because people will always need food. So if you're able to channel that funding to support the different actors in the value chain, you support the farmer. The farmer needs funding to ensure that they are very productive. The input buyers, the input sellers, the maize millers. Now, if you're able to channel funding at each and every level of that value chain, you're not only creating jobs, but you're creating liquidity that will flow back into the economy. What I talked about, keeping liquid. Now, UDB at this level may not be able to do all that because they are not built to serve the low end of the market. But you have SACCOs, you have community-based savings groups, you have MFIs who have built capacity and capability to serve the low end of the market. The challenge for UDB is how do they create a platform where they're able to channel these funds to the institutions that are better equipped to serve the low end of the market. The traditional default approach would be, let's look for regulated financial institutions, like the commercial banks, give them money and see how they can lend. That may not work very well. That may work for big players like maybe say Rwanda, Jesa Dairy Farm, who already have accounts. But for majority of maize millers, who will drive your economic multiplier, employment multiplier, they don't have accounts in Stanbic, they don't have accounts at DFU, but they have borrowed money from a money lender, they have borrowed, they are a member of a SACCO. So how do you support those different institutions so that they can then, UDB can leverage those institutions to drive the multiplier effect that government expects from the 100 billion they're going to put in UDB?
Let's speak to the issue of our savings culture, because you spoke about credit driving the economy, and the biggest challenge has been that a lot of observers say we have a very weak savings culture, a very poor savings culture as a country, and if we have a very poor savings culture, many will say that's informed by the informality of our economy. How then do you begin talking about driving a savings culture that would provide the necessary capital into the financial institutions, and both the MFI and the other bigger financial institutions, that would then create credit that can be lent back into the economy, especially during this COVID period?
It's a very interesting question. There are many factors that go into why people don't save. From our research, people save, but their savings are mainly in liquid assets. When I get money, rather than keeping it in liquid form, either as an account, or I will either buy a cow, or I'll buy an asset, I'll buy a piece of land, which may not really be of great help in times like this, because it's very difficult for you to liquidate your land or assets. And in any case, you probably liquidate it at a lower price, far much lower price. The other reason why people don't save is they don't have money. I cannot save what I don't have. Most of the money a majority of the Ghanaians make is money that is not even sufficient to cater for their living expenses. From our research, we see that 2/3 of Ugandans indicate that they don't have sufficient money to meet their living expenses. So meaning that...
So they're living beyond their means?
Yes, they don't have disposable income. So most of them, whatever they earn in a day is what is sufficient to get them through that day. That's why when people are in a crisis, our research shows that they seek to get more jobs. They don't fall back to savings. Now, there are two things that we can do to be able to partly address the challenge. One is to create opportunities that will bring more money into people's pockets. What we just talked about, the UDB, how they can channel their money into critical value chains. The other thing is to set a mechanism that can make it easier for people to save. And this is where technology comes in. digital financial services comes in. If we can be able to drive the adoption of mobile money, the adoption of the digital channels, and people are supported, money is moved through the digital channels, it's far much easier to save 5% or 6% or whatever it is in my mobile money account than if I'm holding cash. The reason why most of us who work are able to save is because money is actually deducted from source each time we earn our income. In this case, each time you make a transaction, each time you move money through the mobile channel, a portion is deducted. You can't feel that. So over time, we will then be able to build that savings culture. And there's no better time to build that in time like this when people are getting used to digital channels. Because if government is going to provide cash transfers to the informal sector, it will be very difficult for them to go and start distributing money like they were distributing food. But if they registered everyone's mobile phone, and they say, we're going to send this money to your mobile phones, in that instant, government already has a database, will have a database of close to 20 or 30 million Ugandans. And as they keep moving money on their mobile phones, people now will begin to get used to the fact that money comes on mobile phone, and if merchants begin to accept mobile money as a form of payments, then people no longer see a need to keep money in cash, because money they will receive it on their phones and purchase using phones, and in that way you're able to build a system that can help people save.
Share with us the numbers in terms of our savings culture. How bad is it? What does your research say about our savings?
No, I told you that the median savings,
yes,
meaning that the money people have in their pockets, is 4,800 shillings, just under 5K. Just under 5K.
Unbelievable.
Yes. Now, if you factor in outliers, people like yourself, people like myself, the number goes to 1 million. But if you move the outliers, the 2%, the 3%, that number comes down to 5,000. What essentially that means is that people don't save. Whatever they consume, they actually, whatever they earn, they consume. In fact, we discovered, or it has been discovered, that a majority of us, we put aside money before we consume. We don't have disposable. When I get 100 shillings or 10,000 shillings, I will distribute that this money is going to go to this money is going to go to that, this money is going to go to that. So before you know it, I received my salary today, but by the end of the day, I have no money because every money has been allocated. Very few of us have the opportunity that after I've done all that, I still have enough money to go out for a drink. Some of us don't have that comfort to go out for a drink. Every money is distributed, and that's what happens every day.
So what's the risk therein within this period where we've seen, especially the SMEs, struggle to stay in business? Because one, for example, for the vulnerable economy the president was speaking about, where we saw people stay home. So if you are one of those who had a business supplying juice in the city to those who were working, you stayed home. You had no means of coming to the city anyway. But anyway, even the people you wanted to supply were not there. The person who was bringing milk into the city, or I've had the milk, dealers saying they've had to pour away a lot of their milk because the demand has lessened. The hotels are closed, so the places that would have taken their food, the farmer who was taking his tomatoes to one of the hotels can't, because that hotel is closed. So he's having to only supply the few people who are in the market. Now that affects the amount of money in the economy, as you were speaking to. How then do you buffer that category of people to get out of this period and remain in business, but also find a way of bringing them back into business post-COVID, or during, of course, now the probably post-COVID will come in 2021, but during this pandemic?
Yes, the biggest challenge is before even COVID-19, there were the structural issues that make it difficult for people to recover. I'll give an example. If I have an underlying problem of diabetes and I'm hit by a disease, even when they give me medicine to cure that disease, it will take a very long time for me to recover unless also interventions address the underlying disease. Now, in Uganda, 80% of the population, working population, is employed in the informal sector. And most of those are businesses that employ between under 5, between 1 and 4. Those make up a bulk of the businesses. So meaning that it's very difficult to design a government intervention for people like that. Because essentially it would mean that you're designing a program that is going to reach 15 to 20 million people individually. That's very costly. That's very costly. So one of the things that government can be able to do is to be able to cluster those people by promoting productive cooperatives. Productive cooperatives are different from SACCOs. SACCOs is you mobilize people and people borrow money. That does not so much address the individualism, because even in the SACCO I go as an individual and borrow money as an individual. But in a productive cooperative is we come together as different coffee farmers and then form a corporate entity where we all own a mutual interest, and that corporate entity represents our interests, and we're able to build economies of scale. That is a cooperative that can make it easier for government to address some of the underlying challenges. Each of us individually working in a shop, because if you go downtown in the arcades, one shop essentially has like has essentially like 10 businesses, and each one has a space. Each one has a space, and they're all individuals. Now it's very difficult to design a program to actually support those guys. But if those guys were able to cluster, form a cooperative that runs the arcades, then they all don't have to go and sell things in the arcade. But they can create a system where they supply whatever they need to supply, and those things will still be sold with minimal crowding and minimal distancing. But that cannot happen if we are still operating as individuals. So there's a good opportunity for government to be able to even transform the informal savings groups and graduate them into formal cooperative entities.
But there's the tax risk.
Yes.
It's a fantastic way of migrating them from informal to formal, but then there is the potential risk. You excite URA by formalizing, and URA quickly comes and decides they want to look at your books, and they want to talk about what you've not paid in the past.
Yes, that is a big challenge. I know in times like this, government is very keen on resource mobilization. But also times like these bring to fore and challenge some of the status quo and traditional approaches to taxation. In my opinion, this may be a very good opportunity to test some of the creative and innovative approaches to taxation. One of the things that government can consider to do is for most of those guys in the informal sector who are operating below a certain threshold, they can give them a tax break, similar to the tax breaks they give to investors. We give tax breaks to investors because we know they are bringing capital. And that capital is going to grow the economy. And we're giving them space to have the capacity to grow the economy. And once they have grown the economy, we then now tax them.
There was the conversation around the registration now of the taxis and the border border. But I want to speak to the border borders because we've seen a lot of conversation on social media about how many there are actually in the country. And I will stay away from that because that data has not been provided yet. But how do you then, using the example of the border borders, bring them into the system amidst this pandemic and also amidst the new regulations of operating in the city?
Yes. We have a company called a government entity called Uganda Development Corporation. Ideally, it's supposed to be the investment arm of government, and they're supposed to make strategic investments in key sectors. Now, government has an opportunity to kill two birds with one stone with the border challenge. Or even the taxi guys challenge is, these are the guys I talked about who earn daily.
Yes.
They have an opportunity to save, right?
Yes.
So each time they spend out of work, it's just get them deeper and deeper into poverty and crisis. That creates a risk of civil unrest because someone has nothing to look to. They no longer fear death. They can do anything. That creates a risk for civil unrest. One of the proposals advanced by government is to be able to ensure that these guys no longer carry passengers where they've been getting a lot of their money, but start doing logistics. But we all know that individually, I cannot just do logistics because most of these borders operate individually. I cannot just come to your home and you give me money to go and get things from the market. I don't trust you. But if there's a company which is recognized, which is regulated, and in case I am fleeced, I have a recourse mechanism, I can trust. So why can't then we create groups I talked about? They can actually still be cooperatives addressing different sectors, logistics sectors, logistics subsectors.
Yes.
A lot of logistics happens. A lot of transportation happens. That is also a good opportunity to formalize. So once we've created these cooperative entities of different borders whose job is to do logistics, move goods across the city, do all the things that support the restaurants now who can no longer have people, but they will still need borders. The likes of Cafe Javas, they could be able to do that because they have capacity to set up their own logistics. But there are so many restaurants, so many food joints downtown there which don't have the capacity of Cafe Javas. But if you had this shared platform of different borders, they can literally serve the entire food industry down there to supply food over lunch or whatever it is at a minimum cost because it's a shared service. And it can be done in such a way that 50% of the business is exclusively for these cooperative entities. So in that instant, you've done two things. One, you've created employment for those guys, alternative, so they won't cause chaos for the urbanized, modernized, motorized thing you're trying to do in the city because now they are preoccupied with making money. Two, there's no civil unrest. Three, you've created a whole entire new economy which has potential to grow because once they master distributing food within the city, it is the same infrastructure that you're going to use to distribute food from the villages to the city and distribute food to different parts of the country.
As you decongest the city?
Yes.
How do you see the year 2020-2021, the financial year 2020-2021, amid this pandemic, which we're not so sure when it will go away? What should we be looking out for? So what would you tell our viewers to be keen on as we speak about financial inclusion?
The year 2021 brings us at a crossroad where we have a choice of keeping the status quo and we sink, or repositioning ourselves and we move to the next level. What the pandemic has done, it has exposed the inadequacy of our current infrastructure across different things. Call it education, call it whatever it is. Now we can complain and worry about the impact it has had, or we can position ourselves to re-engineer the way we do things, and 2021 may go down in history as a year of turnaround that shook us up, but actually set us on a path for more sustainable development and growth. So those who will see the opportunity, seize it and position themselves, whether it is corporately as a government and a nation or individually, are the ones who are going to stay afloat and the ones who are going to be the greatest beneficiaries from what seemed to be a crisis, but actually it was a crucible of opportunity.
All right. Thank you very much, Joseph.
You're welcome.
Thank you. I've been speaking to Joseph Lutwama, who's the Director of Programs at the Financial Sector Deepening Uganda, and we were talking financial inclusion amidst the pandemic as we discuss the national budget financial year 2020-2021. Thanks for watching.